How does GDP impact the economy for business news? Imagine trying to understand how well a country is doing just by looking at a single number. That number is gross domestic product, or GDP. It measures the total value of all goods and services produced inside a country over a certain time. Business journalists keep a close eye on GDP because it tells us a lot about the health of the economy. When GDP goes up, it usually means the economy is growing. People are earning more, spending more, and businesses are making more money. This can lead to more jobs and higher wages. On the flip side, if GDP drops or grows very slowly, it signals that the economy might be shrinking. Fewer jobs, less spending, and lower profits could be on the horizon. For those reporting on business news, GDP figures are like a compass. They help explain why stock markets might rise or fall. When GDP shows strong growth, investors often feel confident, which can push stock prices higher. If the GDP report shows weakness, markets might react negatively because investors worry about future profits. Central banks also watch GDP closely. If the economy is growing fast, they might raise interest rates to keep inflation in check. Higher interest rates make borrowing more expensive for businesses and consumers. If GDP is shrinking, they might lower rates to encourage spending and investment. Currency values are affected too. A strong GDP can attract foreign investors, making the country's currency stronger. That can make exports more expensive but also boost the economy's overall strength. When GDP is weak, the currency might weaken, which can make imports more costly and impact international trade. Governments relying on GDP to plan policies and set tax levels. When the economy is doing well, tax revenues increase, allowing governments to spend more on infrastructure or public services. If GDP falls, governments might need to cut spending or raise taxes, which can influence how businesses operate. Detailed GDP reports break down data by industry. This helps business reporters identify which sectors are thriving or struggling. For example, if manufacturing shows growth while retail declines, it signals shifts in consumer behavior. This kind of niche reporting helps businesses understand where opportunities or risks lie. In short, GDP is more than just a number. It shapes how business news explains economic trends, forecasts future conditions, and analyzes policy impacts. Accurate, timely GDP data helps audiences see how economic changes influence markets, companies, and everyday financial decisions. That's why in business journalism, understanding GDP is essential for clear and meaningful reporting.